Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Pewter Dasler. He's the CEO of CanAlaska Uranium. This is a story that's been on my mind lately because they've had some success up there in Canada's prolific Athabasca Basin. And uranium we have on the mind because of the big kerfuffle in the United States over Section 232. The working group, as Peter and I speak, is about to deliver. So this is timely and interesting. Peter, why don't you give us an overview of what you're working on, and then we'll get into my questions.
Well, Lobo, we've been active in the basin since 2004, and I would say we were very successful right through to the Fukushima event. We brought in Japanese partners and Korean partners and invested a lot of money looking for another Tier 1 discovery. We've sat quietly for the last 7 years. It's been a very tough time for us to not be active. 3.5 years ago, we got Cameco Corporation to come back to one of our key projects, and they just spent $5 million testing a target that we had left alone with Mitsubishi back in 2010. The target has grown. We always knew that we had a geophysical response and a geochemical response in the area that indicated something quite large. We're only 10 miles away from the MacArthur mine and only about a mile away from the brand new discovery at Fox Lake. So when Cameco started drilling, very quickly they started to see that there was a lot of uranium in the sandstone, which is quite normal when you find a uranium deposit. But the abnormal thing was this, is it went for half a mile above the unconformity surface and for about a mile along strike. So every single drill hole of that series of 10 drill holes hit uranium mineralization. And we got to a stage last December where we fully expected Cameco to keep drilling, to extend this discovery and get into the heart of it. And they informed us that they would have to stay at the 30% level. Markets are markets, business decisions are theirs to make. But that put us back in the driver's seat with a 70% interest in a brand new discovery, 5% uranium next door to their discovery, and very, very close to the infrastructure at MacArthur River. We needed to go do more this year. We raised money in April and went into the field in June and July, and we extended that target to the south another 50 meters and started to hit some very high-grade uranium as we drilled our last holes. 8% uranium with 6% copper, 6% zinc, in a zone that we could tell we're near the feeder zone for this mineralization, because the rocks progressively change from chlorite overprints to complete clay alteration to rocks that you could squeeze in your hands, and these are the rocks that were running 8% uranium.
Let me jump in on that and ask about that, because that is not something I knew. Is this based on a general model or theory, or is this the same type of mineralization they have at MacArthur River, and so it's known that that's what a feeder looks like, or what are you basing that on?
It's exactly the same as what they have discovered at Fox Lake, just about a mile away. Fox Lake has multi-element geochemistry with clay alteration around an 8-meter pop-up at the unconformity. We have multi-element geochemistry around a zone which we believe has a 30-meter offset. The similarity with MacArthur is that we have the structure, the main structure, we have the offsets, and we have the clay alteration. MacArthur does not have all of these extra base metals with it, but various deposits in the basin do. So it depends where you are, whether that fluid that's moving around scavenges extra minerals. But this whole zone that we're looking at for the 1 mile of strike length where Cameco drilled, and now we've focused in into one part of that zone, as well as if you continue 1 mile off to the east to the Fox Lake zone, it's mineralized the same way. This is a very significant structure that has multiple zones of mineralization along it, and we believe that we are on a major target right now that could give us a Tier 1 discovery.
Well, that's very interesting. I had also not realized that you were that close to Fox Lake. I knew, of course, you were in the MacArthur neighborhood, West MacArthur, of course. So is this thought to be possibly one continuous deposit, or clearly the same structure, but could it be continuous, or right up to the property line?
Well, it's the classic pearls on the string. Before Cameco optioned into our project, they had drilled to within a few hundred meters of our property boundary. We have the data on that, so we're just preparing some models now which show the continuity of our zone related back to the Fox Lake zone. It's quite apparent that the C10 conductor that we are on is the same one that they drilled at Fox Lake, and it's mineralized for some considerable extent there. Basically, pearls on the string. Okay. Every time you have a major cross structure, you have the opportunity for breakage of rock and infusion of uranium mineralization and deposition. You have to have several things happening. We have it all. The size of the target, though, is the impressive thing. The amount of water that comes into your uranium deposit generally depends the size or the amount of uranium that gets deposited. Here we're seeing a halo that goes 600, 700, 800 meters above the unconformity. If it was a small deposit, I might expect 100 meters or 200 meters. But MacArthur is one of those ones that goes 500, 600 meters above. Cigar Lake goes 500 and 600 meters above the deposition zone. This is the next biggest thing. This is of that same scale as MacArthur and Cigar Lake, and we are very familiar with those. My exploration manager drilled the very first hole at Cigar Lake back in 1981, and we've been hunting for more of these since. We think we're right on it now.
You should wave your arms when you say it's that big.
Well, the problem is, Lobo, I can't get my arms wide enough. Somebody asked me the other day, how big is it going to be? I think we put an image on our last news release, and there's a press release out today showing the Eiffel Tower as a scale. And the tower, the plume of base metal mineralization and uranium mineralization is well above the height of the Eiffel Tower on that scale. We see it, we have measured it, we have enough drill holes to tell us it's there, and that gives us supreme confidence to continue drilling this target to look for something that is like MacArthur River or Cigar Lake. We have the fluid flow, we have the geochemistry, we have the high-grade mineralization, not just in one hole, we now have it in 3 holes, and then 2% uranium in other holes in between. We've progressively moved into the zone. It's a slow process, and so we had one drill rig working this summer because we needed to know exactly where we were. This winter, we hope to be drilling again in January, February, March, and through the summer again. But this stage, we have the opportunity to put more than one drill rig in. The second to last hole that we drilled this summer was a hole that was about 1/4 mile to the southwest. And that showed us that the system is just as strong, if not stronger, as we go to the west, because we had over 0.1% uranium 500 meters above the unconformity in a structure that points back to our target. So right now we think we have a target that's in the vicinity of 400 to 800 meters long, that has high-grade mineralization all around it. We just haven't drilled into the center of it yet. I believe we can do that in the next drill program.
Okay, well, that was a forward-looking statement. But before we go there, normally I would ask, well, if this is any good, why would the partner, not go ahead and earn in the majority? But we know that Cameco, they just reported a loss. They've shut down their mine. They clearly are circling the wagons and being very defensive, which is understandable. A producer isn't like a junior. They're not supposed to just be a burning match. So I won't ask that question, but I will ask, though, more broadly, why should any investor out there even think about uranium exploration when the producers with pounds in the ground, proven and probable mine reserves, they're shutting down, they're waiting for a better day. And when that better day comes, let's say you're a bull on uranium, obviously the producers would be the first to take off, there's no exploration risk. Why should anybody buy your stock right now?
Well, I think we give tremendous upside because of the infrastructure around this new discovery. If we look at the past 6 or 7 years, we've seen the discoveries from NextGen and Fission, magnificent discoveries. And those are getting valuations, they're making those companies $500 million up to $1 billion in value. We think that any discovery we make in the eastern side of the basin, next to all of this infrastructure, will get valued as pounds in the ground at a much higher value. The Rough Rider deposit was sold at about $9 a pound. We'd make the equivalent for next gen and fission. They're around about $3 or $4 a pound in the ground. We do not have any intention to go mine this. It will take 15 years to put this project into production. Our aim is to show the size and scale of this project, keep a piece of it for ourselves, and sell it to somebody else for that high marketing cost value. If we can get $8 or $9 or $10 a pound in the ground, that would be tremendous for our shareholders. We have an $8 million company at the moment. And trying to show the market what that can become is very tough, because when you talk to Cameco and you look on their website, their next door mine is 100 times richer than the average uranium mine in the world. And so we're trying to impart orders of magnitudes of difference in scale to a target that we're starting to drill into.
I understand. I had to ask because, it's the market being what it is. But you mentioned your peers there on the other side of the basin. One of the things about this is it seems that the target is fairly deep. So let's say uranium is rising, the obvious producers who can benefit immediately are rising, and it trickles down to exploration. Your peers there on the other side of the basin are considerably closer to surface, and you've got a lot of deep drilling to do here. How do you sell that to investors? I'll give you the chance. Sell the audience.
Well, Lobo, if you look at the key zone of McArthur River, it's about 90 meters long, and that holds over half the resource of McArthur River. So you've got 300 million pounds of uranium sitting in a zone that's less than 100 meters long. If I was to put one drill hole every 10 meters long into a zone like that, I would probably have a general idea of how much mineralization was going to be there. So are we one drill hole away to get the market reacting to us, or are we 10 drill holes away? But I think it's that sort of magnitude for us to drill into the target that we've identified so far. It's very quick for us to do that. We can do that in a season. We can do it in 2 seasons. I fully expect over the next 2 years we'll be able to continue to show mineralization of this zone and have suitors at the door. Now, it's really important to recognize that there is finite life to the existing mines in the basin. McArthur River has another 17 years of life left. Cigar Lake, about 10 years of life. Both of those mines feed to infrastructure, mills, that would cost you at least $1 billion to build these days. And we're looking at 15 years out. If we had a discovery today, they could feed into those mills. So our infrastructure benefit is huge, and we have to find more mines. We have to find another McArthur River or Cigar Lake every year to supply the ongoing demand that we see out there. So I think our shareholders can get discovery, an uptick from discovery, but then you've got the strategic value. You have a project that is so close to infrastructure that would be reasonable to say it will get fast-tracked to move forward. We have the Fox Lake zone about a mile away from where we are underground. That is probably accessible from any underground workings that we would try and develop where we're at. If we've developed a target, we could probably drift across and develop that zone. It's not ours, it belongs to Cameco and Areva. But what do you know? You've got 68 million pounds of uranium, which puts us halfway to our target size. So we're looking to have a standalone operation, you need about 150 to 200 million pounds of uranium. Fox Lake is isolated at 68 million pounds of 8%. We have to find another 80 million pounds of whatever grade we can find, and we've reached that target. However, from what we see in drill holes to date, 10 drill holes and then another 6 this winter, we believe that we have a standalone situation right where we are now. We think it'll take 1 to 2 years to drill that off, but even before then, we may have the opportunity to monetize this at a much higher price than you get on the western side of the basin.
Okay, so I guess a summary on that sort of economics and value proposition, the argument is we're much cheaper and we're going for elephants. So you combine those two, and that's why people should take a look at us?
Well, we don't have $1 billion worth of infrastructure to build to make a processing plant.
Okay.
Sure, we've got 150 meters of depth to overcome, but that's a finite amount. We can actually calculate the cost of 150 meters of extra shaft. we're really developing something that looks like MacArthur River or Cigar Lake, only 150 meters deeper, and that's quite feasible.
All right, so let's, if you don't mind, I don't want to get too technical here, but let's talk about the latest press release. Because the results you reported, a high-grade hit. It wasn't very thick, but it was high grade. It's what you're looking for, and yet the stock really drifted down afterwards. What is the market missing, or what happened there? Can you talk us through that?
There have been a lot of strange events happening in our stock this year. We look at the average, what's happening here. Even while the market's gone down and fluctuated, we've seen periods of time where we traded vast volumes of stock, 5 or 10 times the normal volume, and traded down in those times. We know our shareholders fairly well. We have a pretty good list of those people who have more than 200,000 shares in this company. Management has a significant position in there, so we watch what's happening. But we've got 4,000 shareholders, so the average shareholder holds somewhere 50 to 100,000 shares. When you see 1.5, 1.7 million shares selling down immediately after and hitting every bid that we have out there, it means that we've got some good buyers. We've just been on the road and they all bought it and they all bought it down. They were happy. But there was a strange event. Similar strange events happened earlier this year. And I don't like to be too paranoid about it, but we have something which I think is very valuable, and we have it in an $8 million company. Fairly hard to defend ourselves in a down market, but our shareholders have bought in for the long term. Our new shareholders that have come along recently have been supporting us, and so that's why we're able to absorb 1.7 million shares over a period of 10 days or so, when our average trading at that time would be 1/10 of that. I don't know what happens. One person sold out, I don't know. A group of people wanted to sell, I don't know who it was. But they're out now. And so we got a 13-cent stock, well down from our 30-cent average price there, and well down from our $1.65 price that we were operating at before Fukushima.
All right, but so as far as you're concerned, the whole was the proof of concept you were looking for. It wasn't thick, high grade, the beginning of a mine, but it was the kind of mineralization you were looking for in the place you were looking for it. Is that fair to say?
Exactly. The high-grade intercepts that Cameco had intercepted were 5% uranium over 1.5 meters, a mineralized zone at the unconformity. And they were about 27 meters apart. We drew a hole to the north and a hole to the south, and we hit similar sort of mineralization. But as we drilled to the south, our drill holes intersected major structures that were saying, behind us, there's something else. So we progressively went further south, and we ended up 50 meters further south than those intersections. And we could see an increase in base metals, significant increase, went from a few 0.1% copper to 6% copper. Same with zinc. And then higher up in the sandstone, we saw those same numbers going up. We also saw the cobalt and nickel numbers moving up, but we also saw the rocks change. As I mentioned before, we went from rocks that were lightly overprinted with some coloring and some chloride alteration to rocks which were very fractured, very broken, and then completely clay altered. Now, we're just on the edge of the system. So the last thing we did before we left is we put electrical probes down those drill holes and measured to see where the graphite conductor target was behind us. We knew it was behind us. And that gives us a target that's about 40 to 60 meters, so about 100 to 150 feet behind us, but it's over half a mile long. So that is the target that we should have drilled into first. However, we were dragged to the north because there was already mineralization in two holes. We now have mineralization over 50, 60 meters along the unconformity. This is just bleed out of a system. This is a big system. And then above that, we see multiple zones of fractures. And if you look at the cross-section we've done, every one of the lines we put on there, we can join between the drill holes. And we see the clay alteration in them, the base metal alteration in them, and then overprinting everything, almost up to surface, is the uranium halo. Half a ppm uranium.
So an answer to the people who say, oh, well, these latest results, it's much thinner than the discovery holes. is that you're still vectoring in on the deposit. This isn't the deposit. You're not defining or drilling off the deposit. You're still vectoring in on what you're looking for. So, whether this one's thicker or thinner than the last one doesn't really matter as long as you're getting closer to the target. Is that correct?
That's it. This is not the target. This is the indication that the target is very close now, because it's very difficult to get zones that run this much uranium without having a lot of fluid flow and being near a very big source. That's also shown us in the geology with the rocks being completely altered. This is characteristic of McArthur River, Cigar Lake, and the zone around it, Fox Lake. This is a big target. I have made comparisons with other deposits over time. There are many small deposits out there at the 5 to 10 to 20 million pound range. They'll never make it at this depth of the Athabasca. But we went to the deep part of the Athabasca because we believed that's where we could find things that were at McArthur River or McArthur River, even larger than McArthur. We see this from airborne surveys. We flew the first airborne surveys in 2004 and saw the signatures of these things in areas where people had never, ever been and drilled a hole. And so now we're back there drilling holes at these targets. We had this hiatus of 7 years, but we preserved the company structure, 46 million shares, $8 million market valuation, and we're drilling what we figured we would drill 8 years ago.
That's actually a really good point. To go through such a protracted bear and come out with a project with a target worth drilling and only have 40 odd million shares out instead of Australian levels of shares, that is something that I would tip my hat to. I'd like to talk about the exploration budget and what comes next, but before we do that, can we talk a little bit about Mainbridge Nickel and what you have there, what you intend to do there? Because even though we started this conversation about uranium, I'm actually a nickel bull in disguise. Right now, with the global economy kind of shaky, I'm not buying nickel plays. But the supply issues in that space look, very bullish over the medium to long term to me. So it's interesting to see you looking for something there. Can you talk to us about your nickel project a bit?
Well, the nickel story came out of what do we do with our team as the Athabasca was winding down after the Fukushima event. And financing was not there. We had money in the bank. We had a team of 35 technical staff who could lead into other things. And so we looked at other opportunities, and we picked up gold projects, copper projects, zinc projects, but we really got focused into the nickel space. Part of it because we went to look for cobalt. And one more time, let's have a look to see if there's a cobalt target. And we said, forget it. It's too hard to go do that in Canada for what we've got. But look at these nickel deposits in the Thompson nickel belt. Now, we all knew about them, but then we started to look at the amount of cobalt in the Thompson deposits, quite significant. It's about 1/10 of the amount of nickel that's in one zone. So that's interesting. And then we started to see that there are mining claims coming expiring. And you've got to know the history of the Thompson nickel belt. It's the 5th largest sulfide nickel belt in the world. It has some giant mines up there, 5 mines that were found in the 1950s and 60s. The Thompson mine is still operating. It'll probably operate for another 20 years or so. Big smelter up there, but a 200 million ton ore body. And we now know a lot more about it because in the early 2000s there was a lot of government work putting it all together. But nobody could do much because the mining companies, the big mining companies, Inco at that time and Vale and Falconbridge, they had leases over this ground that went for 50 and 60 years. They weren't allowed to trade those leases to anybody else to come in. Back in 2001, 2, 3, there were some very clever guys with crowflight exploration who said, well, we can get in on the edge of here, and they did some deals with Falconbridge, and they got some ground and started to find more nickel deposits in the Thompson belt because no one had really been active once the big deposits had been found. What happened to us in 2012, 13, 14, 15, we saw that this ground was coming available with drill holes in them, with airborne surveys that had never been followed up on. And the day these claims lapsed, we were in their staking ground. And we put crews in there. It cost us $50,000 or $60,000 to go staking around Mountabridge. We've since gone back there at Mountabridge, though, and we've acquired the mine, the old mine, because we can see 3 or 4 zones in there that have never been tested. There's ore still sitting in there. There's one drill hole drilled in 2005 that has 16 meters of 1.7% nickel in it. That's very close to surface. But we were working about a mile north of the mine, and we were drilling 5 to 10% nickel. We went in there in January to drill a target that had some drill holes in it, perhaps a few 100,000 tons sitting in it, but we could see that it was a similar thing to the high-grade mine at Manabridge. So we've got the northern zone now, we've got 2 other zones sitting in there, we've got the mine with 3 zones in it, and we've staked the rest of the horizon where we would expect to see more. And on top of that, we put 10 years assessment on it. There was a lot of assessment that came with us from buying the mine. It cost us some shares, but we got the assessment credits. So we're out there now marketing that project. The 2 projects we got north of Thompson. Big pardon?
Sorry, you're looking for a partner on that one.
We're definitely looking for a partner. We have $500,000 into nickel. We've got $80 million into uranium. I'm a uranium bull. I'm definitely in uranium. We started off in 2004 to find another tier 1 discovery. I think we've got one sitting right where we are now, but we've got more that we've got lined up following that.
Sure.
The nickel story is fascinating, but it's not for us to develop at this time. We don't have enough money. We're too small a company to do that.
Okay, well that's fair enough, and that would have been one of my questions. Is this going to be a distraction? But if we're going to JV it and we're going to focus on the uranium, that makes sense to me. So let's talk about that. What are the deliverables over the next couple quarters? You know, looking at the season ahead, how much will that cost, and how much do you have in the bank?
We got 1.4 million cash in the bank today. It'll take us another $2 million drill program to get the next phase happening in the winter time, or we can delay that to the summertime. We're talking to our partners this week, Cameco Corporation. We're talking to them this week about budget participation. So we'll have some numbers on that over the next 2 weeks. But if we were to start the drills back up again in January, February, with one drill, it would be a $1.5 to $2.5 million program. And I can tell you the funding on that later on. We're going to London next week to talk to people who are interested in our nickel projects, our copper projects, and our uranium projects. And really, for me, it's about getting individual shareholder awareness that we have these assets, yet we're trading for what I think is a fraction of the value of any one of the assets. 5 or 6 standalone projects that I think individually justify twice the market valuation we got now, but it takes a contrarian to be in this market right now.
Sure.
And I'm going to find those contrarians in every corner of the globe.
Fair enough. But so what I'm getting from that, though, is that if anybody's looking at your balance sheet and saying, oh, well, these guys are going to have to finance, I'm going to wait for the private placement to buy. If you have assets to monetize, or if you get a JV on the nickel projects and that comes with cash up front, that you may not be financing anytime soon if you can get other sources of funds to put into the ground.
Well, that's what we generally tend to do. We bought Mitsubishi Corporation in, and they put $16 million into this particular West McArthur project. We bought Coreys and Cameco in from Korea, and they put $20 million into our Cree East project. We bought De Beers in 3 years ago, and they put $2.5 million into a diamond project. We bought Cameco in, and they put $5 million into this project at West McArthur. That's really what we're focused on doing. We realize that the junior companies can't really, without doing a lot of dilution or a huge amount of luck and promotion, get the money you need to put some of these mines into production, and certainly not a uranium mine in the Athabasca. So we're always going to look for partners. You've got to be aware that right now we have over 70% interest in this project.
Right.
There's more than enough room for us to bring in another party that could get a majority interest. We have a partner with Cameco who has the nearby mine, half of the nearby deposit, and they have a mill that's going to be without ore in 17 years after restart. But we can also bring in another party. And I think you'll find that most of the Athabasca, those big mines, have multiple owners. The Asian interest from Korea and Japan are very strong because they like to have some way of guaranteeing some supply to them for their nuclear power plants. Our support from Mitsubishi and the Koreans came really because they were looking for the future supply of uranium to go not to run reactors in Japan or Korea, but to package with nuclear power plants they could sell around the world. Because you don't get a lot of money for a nuclear power plant if you can't supply the uranium. So you can make a lot more money by having that in the ground. And so for us, the value of this project will not be when it's mined. It'll be through the discovery phase and showing that we have a standalone tier 1 target that can be developed further by one of these large groups and getting that valuation and walking away to do the same thing on our next door projects.
I understand. But if it's split 3 ways, let's say somebody wanted a majority interest. If they take 51% and Cameco holds on to their 30%, that only leaves you 19%. So presumably, if you were to do a deal like that, you would insist on being completely carried, and you'd end up with 19% of a world-class mine should one be discovered.
I think we'd end up with more than that because of the dilution factors that are in play at the moment. However, I'd be more than happy with 19% carried to production. I'd be happy with a royalty carried to production. You know, you can calculate what a 1% royalty is on the McArthur River every day. You know, that mine, for mining 300 tons a day, it produces 10 to 15% of the world's uranium, and that's worth a lot of money. So I think keeping royalties on these is sufficient, but if we can keep an interest, that's great. But in reality, I would like to see that $10 a pound valuation applied to whatever we find at McArthur, because we are close to infrastructure, we have the partnerships, the partners have the mills, and we are right close to the latest discovery in the Athabasca, which is Fox Lake, 68 million pounds of 8% uranium. Almost there, but not quite. Well, maybe we can help tip that over the turtles. We think we are very close to the feeder zone for what's showing us there's 8% uranium. The geophysics tells us it's 100 feet behind us. Well, that will take 1 or 2 holes to find out.
Well, okay, but play devil's advocate here, or play the wolf role a little bit more. You know, let's say that the uranium just seems to drag a while longer. Let's say there's no help from the nuclear fuel working group south of the border, and it just drags on, and you have all these partners or potential partners are interested, but nobody's willing to step up to the plate. If you had to go back to the market to raise money to advance your 70% stake in this and keep proving it, would you do that? Would you raise X millions more to keep going, or would you just kind of go back to bear market mode and wait for partners?
I can probably give you a better answer to that after my next 2 weeks of trips. I think we'll. The idea is to increase our share price so that we don't take as much dilution to do whatever we have to do. However, we're not on the hook to do anything. This project has 20 years of assessment on it. We don't have to work it. That's why we survived through that last 7 years. All of our projects had enough work credits on them that they didn't go off the map. We have a very low burn rate in this company now. We had to shed 35 staff. That was one of the toughest things I had to do. You know, great people, but we have those people mostly available on contract now, and they've come back and helped us, and we'd certainly like to get them involved in all the other projects we got on the go. I think that if the market isn't with us, we shouldn't be doing a lot of work. But if we can get that partnership or get that money in some way or another, I think it's well worth our while drilling into this project, because our partners have supported us tremendously so far. My aim is to get our partners to step up.
Okay, well, fair enough. That sounds very good. I have one more question. I like to ask everybody the skin in the game question. You know, if you're going to ask investors to risk their hard-earned money on your stock, can you tell us how much of your own money that you've put into this stock?
I have 2 million shares at probably an average price of 30 cents. So, that's $600,000 I put into it. Put another $20,000 into it last week.
And you bought all that on the open market? You didn't get given a bunch of options and cheap stock for becoming president?
Money. That's hard-earned money I put into this company. No, I have stock options on top of that. No, I believe in this company. I've been 42 years in the business. I've seen a lot of opportunities. But when you see opportunities in the uranium space, it's hard to communicate to people how important they are, how strategic they are, and how valuable they are, especially when they're in the Athabasca. You're looking at deposits which are 100 times richer or 100 times larger than the average uranium mine. And that compels geologists to go look for more of them. And I'm a geologist. I like it. I like what's there. And I got the opportunity with a good team of people to go out there and look for more of them. Well, we believe we have multiple zones under our belt, but this one is the culmination of at least $50 million worth of work where we focused in right into the core part of the Athabasca on the eastern side and said, can we find another McArthur River cigar lake? Statistically, there's probably several more out there, but we've found it. We've found that halo of alteration that says this can only be formed by something that's had a tremendous amount of water flow through it. And what do you know? That water is carrying huge amounts of uranium. It's carrying large amounts of base metals, copper, zinc, cobalt, nickel, etc. So yes, it's just like Fox Lake. It's just like a typical egress deposit in the Athabasca. We love it.
Okay. Well, let's leave it on that positive note. Thank you very much. You've been a good sport facing some tough questions here.
Well, I have to get this message out because I think we've got something that's quite tremendous. I like your interest in uranium, and we have 4,000 shareholders out there who expect me to let them know what's going on, and this is just another way of doing it. Great. So I do appreciate it. Thank you.
All right, thank you.